In this video, guys, we're going to look at day trading versus swing trading. 5 questions to ask yourself to find out which you should be doing. Stay tuned. Hey traders and investors, a very warm welcome to you. Thank you for joining me on the channel. Okay, so we have this age-old thing that's been going on for years, and I assume it's going to go and carry on for years. Swing traders, day traders. Day traders is best, swing trading's best, day traders best, swing trading's best. I hate swing trading, I hate whatever. We know that both people can make money and both people lose money. It's about finding what's right for you. So we've done videos on this before, but I want to kind of drill down a little bit more into this. So let's look at 5 questions we can ask ourselves as to try and identify whether we should become a swing trader or a day trader. So the first one I've got here is, do you have the time to be a day trader? Biggest kind of most practical question out there is being honest with yourself and say, hey, do you know what? Can I be at the screen when the bell goes, whether I'm trading the DAX, whether I'm trading the Dow, whatever it may be? Can I be at the screen during the day? Can I be at the screen during the evening? You need to be at the screen as often as possible, really. I think it's feasible to become a day trader and have allocated time like the open or the close, or the open and the close, and miss the middle part. That's fine. If you have other obligations, I think that's still feasible. But in reality, the more time you can spend in front of the screen, the more opportunities are going to be there. However, it does also tempt you to overtrade. So that's a demon you've got to be cautious of. But let's go back to the point. The practicality point is, can you be in front of the screen? Do you actually have the time? There's no point in saying, hey, you know what? I want to be a day trader. I want to trade the FTSE 100 when you've got to do a school run in the morning at 8 o'clock and the market opens at 8 o'clock. You're going to miss the most fruitful time of the day. Does that mean you can't day trade? No, you might be able to look at the Dow open at 2:30. You might be able to trade that. The point is being very honest with yourself. Not just I've got a few weeks coming up where I can do it. It's, hey, for the next 6 months, year, can I actually allocate the time and resources to doing this properly? Okay, so simple one, but overlooked very often. People diving straight in without thinking about it. All right, number 2. Can you sleep at night with an open position? This is something that's a big thing, big reason why people go with day trading as opposed to swing trading. Day trading, the advantages are that, hey, you know what, whatever happens in the day happens in the day. You don't carry anything overnight. You don't have that overnight risk. You sleep well. You start the next day, whether your prior day was bad or was good, it doesn't matter. You start the day with a clean slate, and that appeals to a lot of people. The advantages are exactly that. You can sleep and not worry about any overnight risk. You start the day fresh. The disadvantages are you miss out on any overnight moves, which can be quite significant. It means you can't run things when you get on the end of a good one. If you're closing end of the day, it might be day 1 of a 6-day run or a multi-year trend. And if you're swing trading, that's perfect, exactly what you want. In day trading, you're taking such a small bite, it might not be worth it. So you've got to weigh up those pros and cons yourself. How comfortable are you with taking overnight risk? Because of course, if you're trading stocks, for example, or even if you're trading FX, when that weekend comes, if FX or stocks is just an overnight in the weekday, your risk then becomes out of your control. You can't get stopped out. The market's closed. The market can do whatever it likes. Of course, you can do things to mitigate that, but ultimately, that's the thing you have to accept if you're swing trading. So something to consider, guys. Can you sleep at night with an open position? Now, you can dial down the size to suit, but it's kind of a general thing to think about. What appeals to you most? Having that clean slate, or being able to hold positions overnight and over several days? Okay, number 3. Can you set your limits, stops, and let it play out? So swing trading, really, I know day trading we do use limits and we do use stops, but we're much more active and we're watching the screen. So when price gets to our level, we're more likely to be there to pull the trigger to get out of the trade or get into the trade. Swing trading, however, relies on you to be able to set your limits, set your stops, and do something else. The point is with swing trading, you allocate time to your research and your execution, you allocate and to putting your orders in, should I say, and the execution is done automatically for you based on your analysis and where your positions are. So are you comfortable with that? Are you comfortable with the fact that your limit is in and actually the market could just plow straight through it? Are you comfortable with the fact that you could just miss it by a few ticks? This is what happens when you have limits in and not there in front of the screen. There are pros and cons to this. A day trader, you might jump the gun. You might overtrade. Some of the bigger things that day traders do is overtrade. But if you're comfortable with doing your analysis, putting your limits, putting your stops in, and letting it play out regardless of what happens in the meantime, then maybe swing trading is something better suited for you. Okay, number 4, do you have the capital to day trade? Generally speaking, day trading can be more capital intensive. Obviously, if you're from the US, there is a day trading pattern day traders rule where you're required $25,000 to actually day trade stocks. So that's something to consider. Also, if you're trading via a spread bet, if you're trading via a CFD, day trading, even though it seems like there's less risk, because you're taking far more trades, you're going to have more drawdown generally. If you consider, hey, I want to risk X amount per trade, you could have 10 losing trades over a 2-day period that could draw you down quite heavily. So a swing trader, that may take a year to have that. So you kind of can, obviously you can suit your position size, you can adjust your position size to suit your capital. But generally speaking, if you're trying to make, good money out of small moves, you need to use more size. People day trading generally will be using more size than someone who's in a similar position swing trading, purely because there's no overnight risk, because they're only taking smaller chunks of the market. So perhaps you need to think, do I have the capital? Or what is a better question here would be, what amount of capital, where does my capital suit best? Does it suit me better for swing trading? Perhaps we can flip down and say that's completely wrong. Perhaps if you're going to be trading 5, 6, 7, 8 position swing trading, you need far more capital for those wide stops. So maybe we can consider that. What is your capital position compared to day trading? Or how would it suit day trading? How would it suit swing trading? All right, number 5. These are all practical questions, by the way, guys. Capital and time. There's two things that are very often overlooked. People just dive head first, but in reality, it takes it's sensible to step back and say, "This is how much I've got. This is how much time I've got. Now let me kind of work something out." All right, last one, guys. Number 5. Are you comfortable with risk? The risk comes in different shapes and sizes. There's risk, which we know, the standard risk of, hey, the risk of the position, but there's hidden risk. And what do I mean by hidden risk? Hidden risk of how are you going to behave and react? If you're day trading, are you going to be meddling positions? Are you going to be constantly over trading, constantly pulling the trigger too much, trading like some kind of addict on the stock market? That is a dangerous thing. A lot of people do fall into that category. Similarly, swing trading, are you going to keep adjusting positions? Are you going to meddle? Are you going to tweak? Can you not leave something alone? Are you always going to come out too soon? Are you always going to want to rotate out of something into another? You've got to be self-aware enough to identify where the hidden risk is. We all know about risk when we're putting on positions. We know how much risk we're going to take. If we don't, check out some other videos I've done on the channel when we talk about actual risk for your positions. But there's a hidden risk, and that hidden risk comes from how you behave in the market, how you behave if you're a day trader, or how you behave if a swing trader. It takes a bit of self-awareness to step back and look at this, and maybe it takes some time to do a month of day trading, a month of swing trading, small size, to see which one suits you better. But ultimately, that's hidden risk is the one that makes the difference between making big leaps in your trading and just sitting there spinning your wheels or even going backwards. All right, guys, thumbs up if you like this kind of stuff. I appreciate the support from you if you're a subscriber. See you in the next one. Take care. Bye-bye.